What is this thing called crypto? You've probably heard the word, but what does it actually mean? At its heart, crypto is a new kind of money that lives purely on the internet. Unlike the dollars, euros, or yen in your bank account, which are managed by governments and financial institutions, this digital money is different. It's built on a technology that allows it to exist without a central authority. You might have heard it called cryptocurrency. The crypto part comes from cryptography, the art of secure communication. This is the secret sauce that keeps transactions safe and the network secure, making it incredibly difficult for anyone to counterfeit or spend money they don't own. It all started in 2009 with a creation named Bitcoin, which was the very first of its kind. Bitcoin introduced the world to a revolutionary idea, a decentralized digital currency that anyone could use. Since then, the crypto universe has expanded dramatically. Thousands of different cryptocurrencies have been created, often called altcoins, each with its own unique features and purposes. Some aim to be faster versions of Bitcoin, others are designed to power specific applications, and some are even created just for fun. People from all walks of life are becoming interested in this technology. They see it as a way to buy things online or in stores, to send value across the globe quickly and often with lower fees, or even as a new way to save and store their wealth for the future, outside of traditional systems. It's a tool that can be incredibly fast and truly global, operating 24/7 without borders or holidays. This technology connects people directly, allowing them to exchange value without needing a traditional bank or payment processor in the middle. This is what people mean when they say it's peer-to-peer. However, for all its potential, the world of crypto can feel confusing and intimidating, especially for beginners. The language can be technical, filled with words like blockchain, mining, and DeFi, and the concepts can seem abstract, making it hard to grasp how it all works in the real world. This essay is designed to change that. We're going to break it all down into easy steps, without the heavy jargon. Think of this as your friendly guide to understanding the fundamentals. Our goal is to demystify this technology, so you can see why it matters, and how it aims to give people more control over their money in an increasingly digital world. To understand crypto, you first need to understand its backbone, the blockchain. Picture a special kind of public notebook, not one copy. Thousands of people hold identical copies around the world. Every time someone sends crypto, a new public entry is written. Example: Alex gave Maria 1 coin. That public record is the public ledger, the heart of transparency. It creates trust without a central authority. Banks keep private ledgers, only you and the bank can see them. With blockchain, the ledger is open. Anyone can verify history. Transparency prevents secret changes. The community polices the system because everyone holds the same truth. How does the notebook stay accurate? That's the chain part. Transactions are bundled into blocks like pages. When a page fills, it's sealed with a unique digital lock. Each page links to the previous, forming a chain. To tamper, you'd have to break all subsequent seals while thousands watch, nearly impossible. Alter your copy and the network rejects it. Consensus means the majority's notebook is the real one. To understand how cryptocurrency works, let's follow a transaction. Meet Alice. She wants to send 1 digital coin to her friend Bob. This isn't a physical coin, but a digital entry on the blockchain. The challenge is to transfer ownership securely, without a central authority, like a bank. The process is like a digital handshake, witnessed and confirmed by a global network of computers. This network verifies that Alice owns the coin and prevents her from spending it twice. The journey begins in Alice's crypto wallet, an app on her phone. She taps send and needs Bob's public address. Think of it like a bank account number for crypto. Alice pastes Bob's address, enters the amount, and reviews the network fee. Then, she authorizes the transfer. This is where the magic happens. Her wallet uses her private key, a secret piece of data, to create a unique digital signature. This proves she approved the transfer, but her private key itself is never revealed. The signed transaction is broadcast to the network. If everything checks out, it's bundled into a new block and added to the permanent, unchangeable chain. The transfer is now final. To use crypto, you need a wallet. A common misconception is that wallets hold your coins. They don't. Your coins always live on the blockchain. Instead, a wallet is your personal gateway to the blockchain. It securely stores your secret keys and lets you manage your funds. Every wallet manages a public key for receiving funds and a private key, the master secret that gives you control. You must never, ever share your private key. Think of your public address like a mail slot. Anyone can use it to send you crypto. Your private key is the master key to the entire house. It unlocks your funds and lets you spend them. Wallets can be custodial, where a third party holds your keys, or non-custodial, where only you have control. This brings more responsibility but also true ownership. Always remember the crypto mantra, not your keys, not your coins. A blockchain is decentralized, with no single boss in charge. How do computers agree on valid transactions in the next block? Consensus mechanisms, different approaches, same goal, secure agreement, proof of work, miners race to solve a puzzle. The winner adds the block and earns coins and fees. It's secure because it's expensive to attack, but energy intensive. Proof of stake, validators lock up coins, get picked to propose blocks, cheat and you lose stake. Far more energy efficient. Beyond payments, crypto enables fast, sometimes cheaper cross-border transfers. Traditional routes can be slow and costly. Crypto can arrive in minutes. It's powerful in places with unstable systems and for remittances. Smart contracts run programs on-chain, powering dApps, NFTs, games, and more. Ownership records and decentralized finance, lending, borrowing, trading without a bank. Tamper-proof, public records, degrees, medical files, land titles, permanent and verifiable. A quick demo could create a wallet, send fake coins on a testnet, and confirm on a block explorer. Visually follow a transaction from start to finish to see the whole journey. As you step into the world of crypto, it's crucial to understand the landscape. It's an exciting frontier, but it's also new and often unregulated. Think of it as a digital Wild West. This means incredible opportunities exist alongside significant risks. The most visible risk is volatility. Prices can swing dramatically in short periods, driven by news, speculation, and market sentiment. While this can lead to impressive gains, the opposite is also true. Losses can be large and happen quickly. This brings us to the golden rule of investing in any high-risk asset. Never invest more than you can comfortably afford to lose. Treat this capital as speculative, separate from your essential savings or retirement funds. Beyond market risks, you must be vigilant about security. Scams are unfortunately common. Maintain a healthy dose of skepticism and always do your own research. If an offer or a project seems too good to be true, it almost certainly is. Phishing attacks, where scammers impersonate legitimate services, are rampant. Always double-check URLs before connecting your wallet or entering credentials. Beware of unsolicited offers, especially those sent through direct messages on social media. A core feature of crypto is that transactions are final and irreversible. There's no bank to call to reverse a mistaken payment. If you lose your private key, your funds are gone forever. Your seed phrase is the master key to recover your wallets, protected above all else. For this reason, it's highly recommended to use a hardware wallet for storing any significant amount of crypto. These physical devices keep your private keys offline, away from online threats. Good security habits are your best defense. Never share your private keys or seed phrase with anyone. Use strong, unique passwords for every service and enable two-factor authentication, or 2FA, wherever possible. Start with small amounts to get comfortable, and stick to reputable, well-known tools and platforms. Now let's talk about fees. To send a transaction on most networks, you must pay a fee, often called gas, or simply a network fee. This fee isn't arbitrary. It compensates the miners or validators who use their computing power to verify your transaction, bundle it into a block, and add it securely to the public ledger. It's the cost of keeping the network running and secure. Fees and transaction speeds vary widely between different blockchains and can change based on network congestion. When many people are trying to make transactions at once, costs go up. You can often pay a higher fee to have your transaction confirmed faster. Some chains are designed for high throughput and low costs, where a transaction might cost mere cents and confirm in seconds. Others prioritize maximum security and decentralization, which can mean fees of several dollars and confirmation times of several minutes. This is often referred to as the blockchain trilemma, a trade-off between security, decentralization, and scalability. Finally, remember that crypto doesn't exist in a vacuum. It's subject to real-world laws and regulations which differ by country. It's your responsibility to understand the local rules regarding crypto, especially concerning taxes. Keep good records of your transactions. Tax laws for digital assets can be complex and are still evolving. If you're ever unsure about your obligations, it's always best to consult a qualified tax professional in your jurisdiction. We've traveled far on this journey, from the basic concepts to the practical realities of risk and security. With this foundation, the world of crypto should now feel more familiar and navigable. Enjoyed this? Please like and subscribe. Thanks for watching.